Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
This is the new ISE FX option, Mexican peso index. All right, so notice down here at around 129 or so, there was a couple of candles that based for a period of time, followed by an explosive rally. We had a couple of weeks in a row. This is a weekly candle again. We had a couple of weeks in a row where, for whatever reason, and believe me, folks, at this point in time, I couldn't tell you what the reason was for that explosive rally. However, I missed that explosive rally, but that doesn't mean that I can't use a chart for what it's really designed for. I want to know where these explosive rallies happen. What's the origin of that explosive rally? I want to know where these big sell-offs happen. And I don't know what caused the big sell-offs. Steve, you mentioned a stock today that just got hammered, a stock called Baidu. Right away, by just remembering a stock by where it came from, without even looking at a chart, I can say to myself, well, Baidu closed down about $55. If it ever comes back to the origin of that big drop, I'm going to sell short, okay, because there's probably going to be some leftover sellers at that price level. Either people that made money on the trade, people that were holding the stock trying to get out even, or big institutions that still have sell orders up there that weren't filled because prices fell before they got a chance to fill those orders. So this is a very, very interesting chart, and I actually took a picture of this chart. This is one of the trades that I did, a sample trade for my students in the extended learning program for the Forex. I demonstrated how we could take advantage of buying this support level, buying a pullback on last week's candle by using an FX option, so that we could speculate on the dollar strengthening against the Mexican peso, again, with very, very low risk. Okay. So support and resistance is key. Now, I'm an educator, but I always do my best to keep on top of things and to continue to educate myself. And the 4 stages, which I just mentioned here, I was first exposed to them by reading a book called Secrets for Profiting in Bull and Bear Markets in 1987 is when it was written. I didn't get a chance to read it until after the 2000 bubble. I wished I would have read it sooner. Okay. It was the one thing that kind of opened my eyes to how the markets work, and I just have been using this information to help me stay on the right side of any kind of market for the trends. And it was written by a gentleman by the name of Stan Weinstein. And Stan Weinstein, of course, he used something that we didn't have back in the day of this other gentleman here, Mr. Schaubacker. Mr. Weinstein was able to actually use indicators that were invented in the 50s, 60s, 70s. Some of them were invented. The RSI was invented in 1978, Relative Strength Index. The moving average came along, and of course volume came along. Now, he had a quote in this book where he said, the more sophisticated players, however, end up with super profits because they ride the stage 2 winners all the way up while quickly getting out of their problem stocks. And I put this quote in here because this is really, really key. This is an example of somebody who rode the 4 stages as more of a position trader. In other words, he only liked to buy low and then ride the winners all the way up until they topped out at the very top and dropped. And so his style of trading was very, very simple. It was just a position trader, and again, using these 4 stages to decide his time, his entries, and his exits. Mr. Schaubacker, one of my students in the extended learning program, one time when I was mentioning the 4 stages, he typed in this gentleman's name in the chat, just like we have here, and he said that in 1934, Mr. Schaubacker actually wrote about the 4 stages too. Well, obviously, Mr. Schaubacker's time was ahead of Mr. Weinstein's time, so I'm pretty sure Mr. Weinstein got some information from Mr. Schaubacker's book. And so Mr. Schaubacker actually, when I read his book, he wrote several books. I'm currently reading Stock Market Profits. I would recommend this book, Stock Market's Profits, because it's pretty much all on stock market theories and how he came up with the 4 stages and how he proposed to trade them on different time frames. And actually, he just used daily charts and weekly charts, and the only technical tool he had was a short-term trend line, probably on hand-drawn charts, okay? No indicators available to him at the time. However, the other books that he wrote were very, very good books. It's just that they were more about how to buy a stock in 1929, and I'm sure that most of the things that have happened since 1929 have made a lot of the information in a couple of his other books. They were more like complete stock market training guides for common people to learn how to trade stocks back in those days. So we've come a long way since then. So this book here, though, Stock Market Profits, is a really interesting book. And he made a quote here, and this is where I truly believe, and when I teach these classes, I try to stress to people, his quote was, "The best argument, therefore, for combining short swing speculation with long-term investing on a cyclical basis is that the average operator will do so anyway." What he was talking about is the average trader was going to actually mix up the different styles of trading between what he calls short-term swings, which is trading the daily charts, the ups and downs on a daily chart, versus the long-term trader who just bought and held on. So this kind of opened my eyes to the next few slides we're going to look at here. This is the aforementioned Baidu, folks. And this is, again, a stock that absolutely, if you bought a position in this stock and held on and just did nothing in just a very, very short period of time, you were rewarded tremendously. This stock has tripled this year. And notice over here where it says party like 1999, okay, part of the reason for that is this uptrend here and this downtrend here was driven by fear in this case and greed, of course, in this case. So other countries have stock market bubbles that are similar because everybody's got pretty low interest rates. And this is the result of low interest rates, okay? So here again, economic cycle is the yellow line here. Stock market cycle happens to be the other line. And you notice that seems like the stock market cycle is leading the economic cycle. And that's one reason why the news can be bad at the bottom and the market still turns. The news can be great at the top and the market will still turn. And these are the different sectors that participate at different times during these rallies. So this slide is pretty much an eye-opener overlaying the economic cycle with the equity cycle. Well, before we get to that slide, other assets such as treasuries have pretty much a different type of cycle. They go up usually when fear is high. The dollar usually goes up when fear is high, so they have their up cycle almost the exact opposite of the equity cycle. Obviously, if everybody is fearful, money is going to come out of high-risk assets such as commodities and stocks, and they're going to go into low-risk assets such as the bonds and the dollar. If it's foreign countries happen to buy U.S. bonds, of course, they're going to have to convert their currencies into dollars. So very, very important slide because these cycles can actually appear in the different asset classes in the reverse of what you're going to see in other asset classes. Okay, so here again we see a treasury. We see a big rally in the treasuries due to all the fear we had last year. And then, of course, a blow-off top, something we call a blow-off top up here, and a big collapse. And it actually collapsed all the way down until it hit this support level at 112, and then we've had some kind of a counter-trend rally ever since in the equities markets. Why is this important? Well, if bonds go down, which of course they can, that means interest rates go up. If interest rates go up, that probably means you're going to see money coming out of the equity markets and going into less risky assets.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.